chart. Let's go to Apple, right? So this is a fresh chart, no studies on them, no kind of, no simple moving averages, no nothing, right? This is strictly candlesticks. So what do we do? What do I personally do in like evaluating a chart? Well, there's many different time frames you can pick, right? So over here we have the daily chart where every candlestick is a day. Now, I like to start off, what's the overall trend of a stock? So this is Apple. So I like to go to the weekly. This is the weekly chart where every candlestick is a week, and the max time frame we have here is 3 years. So we're going back the past 3 years, and every candlestick is equal to 1 week. So as you can see, Apple is relatively on an upward trend now. So we got the trend on the biggest time frame, which is upward trend, right? It's basically going like this. And what I drew there is called a trend line. We're gonna get into trend lines later. But if you see now, like stocks generally go like this. We're gonna start off 35, right? Impulse, correction. Impulse, correction. Impulse, correction, impulse, correction, impulse, correction, impulse, correction, impulse, right? So how do we know when a stock is going to go up and when it's going to go down? You have to identify, first things first, you have to identify key levels, right? So at the end of every impulse, there's a place where the stock bounces off of. So we're going to mark that down as resistance. Oh snap, we got another one. So at the end of every impulse, it's going to be a place where the stock bounces off. So you want to mark that. So I'm going to utilize, you know what I'm going to utilize? I'm going to utilize this price levels. So follow me here. So the start of the impulse is here, end is there. So we mark it. See that white dotted line? And we mark down the end of the corrections as well. So starting from here, correction here, we mark it. And then we go to the next impulse, right? Next impulse, it ends right here somewhat. So we mark that down. Next impulse ends right there. And notice, I want you to notice this price level that I marked down right here. Let me make an arrow to make it better noted. Let's see. Oh, gorgeous. You see that matter of fact, let me change the color. Let's make it yellow. Or matter of fact, let's make it white. Boom. Okay. So you see that price level I marked down right there? Notice how if we go further out, it hit right here, 1, and it hit again, 2. This means this is a key level, otherwise known as support or resistance. And we're going to get into that right now. But let's continue on marking key levels, right? So stock goes up, 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 up. Boom, it ends right here. Bounces off that level, comes back down. We're going to mark that too. Boom. Goes up to here. We're going to mark that off too. Boom. And we're going to mark the all-time high. And we're going to mark down here once it comes down, right? Boom. Comes up right there. Boom. Comes up down right here. Boom. So all I'm doing is marking where does the stock bounce off of. This is why I say this is a video game, because if you can understand how price moves, then it's one big game, and we're gonna get into that as well. So So we switch from the weekly chart to the daily chart. Boom. So now I got all my key levels noted for the most part on the weekly, right? So the bottom, let's say any of these key levels could be known as resistance or support. So when the stock is above, like let's take this level, for example, the 107.65. It's used as support or is used as the floor for the stock, where it goes down and bounces off the floor. Then it goes up, it hits resistance right here. Resistance is like the ceiling. So these key levels can be used as support or the ceiling. And what happened?
No.
Okay. So you guys following me?
Yes, sir.
Okay. So support and resistance are super important because you want to take positions, you want to take long positions as support, and you want to sell at resistance. Or sometimes it breaks resistance. Like for example, like we're gonna use this level right here that we marked off, right? I'm gonna change it to blue so we can better see it. We're gonna take this level over here. The stock went on an impulse all the way up and it hit right here, boom, then came back down. If we go further down the line, right, it hit again right here as resistance and it bounced off it. If we go further down the line, it has a hard time breaking through. But when it breaks through, it goes up big, boom, and then it comes right back down.
Se fue.
This is called like a fake out, really, because it kind of goes up, but then it comes right back down subsequent days. So you want to be mindful of fake outs. But if we notice right here, again, once it's tried going back up, it hits resistance again, boom, and bounces off of it. So the more times the stock hits a particular level, the stronger that level is. Okay, so the stronger that level is, once it breaks it, it's gonna make a violent move, either upwards in this case, or like let's say like this level right here. If it would have broke this level right here, it would have went down to this level and would have tested that. And the same thing going up. Same thing going up or down. These key levels are levels to look at closely when you're in a trade or when deciding to enter a trade. Like let's say we're here, right? We're gonna zoom in. Matter of fact, let's zoom out a little bit. So let's say we're here, right? And the stock goes down here, and then it's kind of flatline a little bit. That's a great entry because we're close to support. It's a great entry for going long, right? So we take a position here, and then we watch closely if it's gonna bounce off this level that we marked off, this blue level, or if it's gonna break it. So always utilize key levels in order to make your trades. Always take note of support and resistance because these key levels, the stock will either bounce off it or break through. But you have to watch price action. You have to watch what the stock is doing at those levels to make good trades. Okay, you guys follow me?
Sir.
Awesome. So we're gonna speak about. Hold up. Let's see. Hold on 1 second. I need to get better at utilizing this. Hold up. Okay, boom. How do I move this? Oh, boom. There you go. There we go. Okay. Oh, matter of fact, over here. All right. So we see the candlesticks. We see price action. how does a stock move? Well, volume. Without volume, the stock doesn't move at all. You can have the best stock in the world, but if it doesn't have volume, it's not going to move. And what's volume? Volume is the amount of trades happening per that session. So in this case, since we're looking at the daily chart, these bars down here, this is volume. So this is the amount of trades happening per day. And we're gonna put a
Is each bar representing a day?
yes, sir.
Awesome.
Yes, sir.
So I got a quick question about the bars.
Sure.
You know, sometimes they're like that square, rectangular shapes, and then sometimes they're like thin lines.
Oh, the candlesticks?
Yeah. You see how the candlesticks sometimes they're like a thick line, and then sometimes they're a thin line. And sometimes they're
Absolutely.
both.
Absolutely. Good question. Good question. So let me remove all these price levels, since you guys already know that those price levels are key levels. I'm gonna remove them so we could better see the candlesticks. And let me remove these studies as well. So we have a clean chart. So clean chart, boom. All right. So we're gonna go to a better, let's see, which is the video that I learned. Okay, this is the video that I learned candlesticks on.
Yeah, me too.
Yeah, so in this case, we have a green bar. What that means is that it opened up higher than the day before. So anytime you see a green bar, it opened up higher than the previous open. Okay.
So that's from like overnight trading.
Yeah. So
This is the low.
so in the green bar, this is the open. So it opened up here. At some point during the day, it went all the way low, then came back up to this high, and then it closed here. So that's what that means. Those wicks mean that during that time frame, it went all the way low, came back up, it went all the way high.
That's like a
down.
quick summary of what the stock did that day.
Exactly.
Got it.
Well, that time frame, because these
time frame,
candlesticks could be any time frame: 1 minute, 2 minute, 5 minute, 4 hours.
Gotcha.
So in real time, what it's gonna look like is gonna look like this. I'll show you right now. He does an excellent job of doing this. So I always refer to this video. So boom, stock opens there, goes all the way low, then comes all the way up to the high, and then it closes down here. Okay, so green bars open at the bottom. So we're gonna look at that again. So just refer to this video. I'm gonna send the link and go through it a couple times just so you can see how candlesticks are formed, right? So hold up, let's go back. Let's see. So it opens up there. At some point during that time frame, it goes all the way low, comes back up, all the way to this high, then comes back down and closes there. So these are called wicks. Those sticks are called wicks. So the same thing goes on for the red bars, except reverse. It opens up on top. The top is the open, and we're gonna see how it moves during the day.
You gonna let him roll all night?
Let me wait
Alright.
for it.
Just sit in the car.
You going to let him roar all night?
Check these
Happy.
out, bro.
You
Before we
Gucci?
take a little break.
Oh snap!
We got some 24s.
Oh snap! Throw some D's on that. That's what's up.
I got these tints because in Arizona the back window can be limousine tint.
Oh snap!
I was
That's
just about to ask you,
fire.
where you at? Because you were short sleeves.
Yeah, I'm in
Shit.
Arizona, so
Nice.
chilling. 70
Nice.
degrees.
Yo, look at that. This guy living life. Meanwhile, we over here cold.
I hate you right now.
Yo, word. So, Bunny,
Covered in snow.
since you're driving, how long you gonna take to go to your destination?
I'm not driving.
Oh, you're not driving. Oh, awesome. Look at
We're
that.
going shopping, so I'm just chilling.
Look at that. Awesome. So,
Smart man. Turn the vehicle into an office. That's what I'm talking about.
no other way. Let me drink
That's
some.
right.
Some of my smoothie. Give me a minute.
You gotta do what you gotta do.
Yo, I didn't even know there was other people on this call. Is that Kelvin I hear in the background?
Oyete loco.
Yep, it's Blackie.
Dude, I joined the freaking Zoom and all I see is Bunny's face on the bottom. I'm doing this shit on my phone. I don't know how to fucking use Zoom on the freaking phone here. Oh, there he is. What's up, Kels?
You need Jesus in your life.
Just give me a few more weeks. I might look like Moses over here with this freaking big ass beard. Who else we got here? We got another Jimenez on the Zoom too. I see.
Yes, he's
Joel?
my old high school classmate.
What's up, Joel?
Yo.
We got the
What's
world
good, bro?
investments, bringing the world together.
Word.
Right.
Yo, Kelvin, you gotta grow a beard too, man. What's up?
It don't, bro.
Huh?
I try.
I'm dying to take this shit off.
Why do you have it on in the first place then?
Well, I said I was gonna keep until Corona ended, but Corona doesn't want to end.
Yeah, all right.
Dang.
Next is the RFID chip and all that.
Nah, hell no.
But anyway, so candlesticks. So a red candlestick opens up from the top. So it basically opens up from the top and goes lower than what it opened as. So what that looks like is like this. So it opens up, goes high, comes back low, all the way down there, closes right there.
That's when people panic right there.
Oh yeah, but we're gonna show you how not to panic. Diamond hands, baby. If the play is good, of course.
Unless it's GameStop.
Yeah, word. Those people have freaking paper hands. Man, I was rooting for them. But yeah, that's what candlesticks are. That's what
Interesting.
candlesticks are. That's how they move. So we're gonna go through to the open one more time, the green one more time, right? So green candlesticks, they open up from the bottom, go all the way low, and go all the way high, come back down from the high, and close right there. So the wicks mean they just went down from their open. The wicks just mean it hit that low, and the high wick means it hit that high and came back down. So yeah, it's candlesticks. So that's why you see all these crazy candlesticks like this one. So let's say this is called a doji candlestick. And well, no, that's not a doji. It's I forgot what it is, but in this case, it opened up here, went all the way downward, came back up, all the way to this high, and closed right there. This one opened up here, came all the way down. Oh no, opened up here, came up, went all the way down to this wick, came back up, closed there. So just familiarize yourself with the candlesticks and the wicks and everything. I'll refer to that video. I'll send you the link and watch it a few times. Okay. So what's next on the agenda? We covered key levels, aka support and resistance.